Interesting action this morning, but again, if you've been paying attention to anything that I've been saying on the streams here, this is the type of action that we are expecting. Again, these big moves to the upside, moving back to the downside here. There's been, again, a couple of updates here on some the situation unfolding in the Middle East. Again, you had the reaction to Nvidia's earnings. You had Square yesterday laying off, I believe it was, 40% of its workforce here, effectively citing, again, just the productivity boost potentially coming from AI here. Not necessarily the best thing that you want to see in the world. And again, you're continuously seeing this rotation into other areas of the market here, because again, the market is just not the same animal that it was 6 months, a year ago here. We've seen these AI names and Mag 7 just go up absolutely crazy over the last few years here, and investors are now looking for, okay, where are those next opportunities going to be? Because we can't just close our eyes, pick a Mag 7 allocation, and then go from there. So, we have a lot of interesting post-earnings today, everybody. We did receive PPI, which is, again, Producer Price Index. Wasn't good. It was not good. You saw very, very high numbers on the PPI there. Let me see if I can pull it up quick. Gold's up. Told you. That's going to be an interesting one. Wait, why is this not? Where's PPI? Come on. Why can't I find it? Let me just go on the actual thing. U.S. January producer prices rise 0.5% month over month, with the estimate being at 0.3%. Year over year, we saw a 2.9% increase versus the estimate of 2.6%. Core PPI was up 0.8% month over month, estimated at 0.3%. Year over year, we saw 3.6%, with the estimate being at 3%. So we saw, again, higher than expected PCE, and now we are seeing higher than expected PPI now, which the market is definitely not going to like. We also saw, again, this new, what is it here? Amazon... OpenAI and AWS are expanding their existing $38 billion multi-year agreement by $100 billion over the next 8 years here. Let's see. We saw OpenAI raise $110 billion at a $730 billion pre-money valuation, backed by SoftBank $30 billion, Nvidia $30 billion, and Amazon $50 billion, alongside new strategic partnerships and AI compute access. ChatGPT now has 900 million weekly users, 50 million subscribers, and over 9 million paying business users, with record growth expected early this year. The deal boosts the OpenAI Foundation stake to over $180 billion. So we're seeing a lot of movement across the market here. Again, just like I've been saying to everybody here, the game plan is not going to change. It's going to be a main focus on post-earnings and then looking for these sector rotations here. Bonds are moving very interestingly. We have the 10-year dropping down below 4 for the first time since when? Back in, we did see that in December here, but it's been hanging out above 4 for a pretty long period of time. We have gold pushing back to the upside here. Just a ridiculous setup forming here, guys, on gold. This is one that we've been talking about over the last couple of weeks. As you could easily see gold right back to the highs in the very near future here. GLD's pushing up nicely this morning. Again, this wick here is just nonsense. The low of day yesterday on GLD was actually this purple line here. You're seeing software get hit again today, and you're seeing Bitcoin down as well this morning. So remember what we were looking at over the last few days here. Bitcoin moving to the upside, software moving to the upside, Mag 7 starting to move to the upside there too. But one of the things that I kept saying is you can't go from it's so over to we're so back so quickly. We have to wait for those additional layers of confirmation to tell us, okay, this market is actually ready to start making these aggressive moves back to the upside. And what was the likelihood of that? Very, very, very low. So we have IGV coming back to the zone here. We have Bitcoin moving back down below its daily 10 exponential moving average here. You have MAGs over here, which might actually be dropping down below. It's coming back down to that 200 EMA here. This is the Roundhill Mag 7 ETF here. So this is looking like it wants to make some further downside moves. Market's not looking good. You easily could get back down to this zone here over the next couple of days. 6,800 here, another 58 point move-ish on ES. But again, what we really want to see out of the market here is a move down to like 65.24, but ideally, if we really want to wipe out a lot of this fear in the market and eventually get back to a period in the market which can be incredibly fun, we might want to see the market come all the way back down to this prior all-time high zone here, right around 6,167 on ES. In the SPY, I believe that's low 600s here. Yeah, it's about 615 here. But ladies and gentlemen, it is that time of day again. Say good morning to somebody in the live chat. If you guys would like to say good morning to me, would love to receive some good mornings over here. If you guys are new to the stream, new to the group, new to the channel, let me know. I'd love to welcome you guys in here. And as always, ladies and gentlemen, make sure you guys are hitting that like button on the way in. It costs you absolutely nothing to do it, but it helps me out a whole lot, spreading these streams out to as many people who actually want to learn. We have a 200 like goal on the stream. It is public live day. Make sure you guys are hitting that like button on the way in. We're going to have some fun here too. Also, congratulations to those of you guys, again, in LTMP that were able to nail circle this week off of the post-earnings move. That was another 1,000% trade off of that post-earnings move there. So, again, everybody that's in that one should be very risk-free there. Even if, again, the whole thing were to absolutely tank, you would still make money on the trade if the remainder of the position were to go to zero. So, I don't know. Gold's looking really interesting here. Yeah, it's starting to peak. So watch GC here. 50. What was the level we talked about? Netflix, Francisco. Nice. What was the level I put in the pre-market plan for you guys? Yeah, it's like 52.69 on gold here. Could be very interesting for another break. If you were trading the futures on it, again, you probably would have looked at this right here, 52.20. But gold does look like over the next couple of weeks here, it's going to make a push back into the highs. Why wouldn't it? Is kind of what we're thinking about here. It's like you're seeing almost every single like factor and point in the market here pointing towards the fact that a lot of money is going to start flying into things like gold. Because like, all right, think about it like this. After those reports came out over last weekend about, let's say, AI productivity, job loss, let's say, ghost GDP, and let's say price level still remaining a little bit higher, you end up in a situation eventually where a lot of these developments in AI are deflationary because demand goes away. The consumer, again, these white-collar jobs no longer really exist, and a lot of those people that were spending a lot of money in the economy no longer are. So you end up seeing this contraction here in price levels and the unemployment rate go up. So what then happens as a result? Well, fiscal and monetary policy action here. Maybe we see different changes to the tax code, but then on the monetary policy side, you could see a little money printing and also lowering the federal funds rate in order to kind of stimulate certain areas of the system, which again is bearish for the dollar and bullish for things like gold, which is almost why I don't really like the bond argument. Like, it's okay for like short term, especially right now, it's okay. It's weird though, because like you saw hotter than expected inflation and then like yields are still down, which again wouldn't really correlate there because you would, this is just like flight to safety here because again, if inflation is going to be higher than expected, well, in the short term here, we wouldn't expect rate cuts. So then why would people then expect rates to be lower in the future than they are right now, right? That's a kind of a weird like circle there that we're looking at with the bond market this morning, but gold looks great. I love this. How's SoFi look? I mean, let's take a look. It's probably not going to look good. No, again, everything is going to start moving down, guys. That does not look good. Guys, okay. So this is something I say all the time. There's a time and a place to be taking action in the market. You mean the TLT trade? Yeah, I don't, like, you can, like, short term it looks fine. But, like, just think about it logically. It's like, if we're thinking about a flight to safety trade, we have gold for that, you know? Like, and especially if part of this flight to safety trade is going to include eventually dollar weakness, it's like, like, I don't know if going long bonds is going to be the best idea. And we talked about that in the YouTube video too. Like 2 days ago, or I think it was 2 days ago, I made that YouTube video for you guys. And I was like, yeah, but like if you're going to see like the value of the dollar decrease because of this like monetary policy and fiscal policy action here, it's like, well, bonds aren't necessarily the best way to take advantage of this. It's things like gold, it's commodities, Look at oil this morning. Oil obviously is going to be moving for different factors. I'm not saying that I just was thinking about oil. Look at this. Rip City here. We've been talking about oil a lot as this being like very, very, very interesting for movements over the next few months here. Really since like down in here, right around when oil was 60. But seeing oil move up here is definitely going to provide some upward pressure on the inflation metrics. Not good. So, we do have some post-earnings candidates today. We have Dell, we have Mara, we have XYZ, we have RKT, and I thought there was one more. What was the other one? IGV. What was the other one? It's not Novo. It's not Sweet. Oh, so maybe we only have... Oh, that is 4. Okay. Yeah, again, I've been screaming gold from the rooftops, like, ever since we were down in here, guys. Like, it really looks like this thing wants to go on a round 3 or 4. Just absolutely, like, epic move to the upside there. So, again, pay attention or pay a premium here. This could be another massive one. Where's NVIDIA this morning? Ouch! Ouch, NVIDIA. Moving aggressively to the downside. Uh-oh. Uh-oh, Spaghetti-O. And look at Palantir. Palantir's still probably... I mean, you do have a base here, but that's not looking too great. Again, we looked at Bitcoin there, but let's take a look at Ethereum quickly. This is not going to be looking good. Again, coming back down below its daily 10 exponential moving average. If you want to, again, remain like short-term, potentially like optimistic about Ethereum, you got to hold the 10 EMA here. You lose it, it's just like, meh, you can't really look at it anymore. It's probably just going to come cruising back to the downside. Then what else? Where's Neo, actually? What's Neo look like? And Neo coming back down into the range. Yeah, any tickers that you guys want to talk about, let me know. That's what I'm here for. Again, I've really tried to get this across to a lot of you guys, like, over the last few months here. It's just like, caution, 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 caution. Things do not look good. Not high quality conditions. Be careful. Hopefully you've been listening. Like, seriously, hopefully you've paid attention. Trade the post earnings. Have some of these sector rotations here, like the utilities and the telecoms and gold and things like that. But other than that, the market is still, like, not very far off the highs here. Like, think about this. We're only, what, 2.7% off the highs? What happens when the market drops 5? If the market drops 5 or 10% off the highs, what do you think happens to some of those higher beta names? They keep going down more. A lot more, actually. ACB today, perhaps? Let's take a look. The weed stocks looked interesting. It's not really a full setup yet. It kind of is. I'd almost want to look for... What do you call it? I'd almost want to look for, like, rescheduling news. Did they already do it? No, I don't really think they are, but we could see some movement there. Novo, I mean, the Kagrasima stuff was not good. But then the weird stuff, we talked about this earlier this week. I was like, why are they comparing these two drugs here? And also, why are they comparing, like, different dosage amounts? It just looks weird. And this is something we've talked about a lot in the past with Novo, where it's like they are not playing the same marketing game as, like, Lilly is. They need to act a little bit more like American in the way that they're going to be showcasing the data and issuing these reports. And, like, quite honestly, it's like, should they need to do that? No. But, like, again, you have a really cautious CEO going into this year. You have some of these other... I liked their, what do you call it? Their GLP-3 data. I think that's what it was. I forget where it was. It was something like that. But they need to get it together. They need to They need to really start getting things together here, or else it's not going to be one that I want anymore. Let's see. Yeah, 19.7% weight loss in what do you call it? GLP-3, which I think beat Lilly's. Uh, to answer both Zepbound and Retatrutide, yeah, but I'm. Yeah, it's 19.7, and I thought Reta was 17 or something. That's what it looked like, but we'll see. It was something like that. All right, ding, ding, ding. Market's open. Here we go, ladies and gentlemen. Let's see what we get. Yeah, gold looks interesting here. All right. You could almost kind of look at that 5-minute opening range right there on gold. Then we got to take a look at the post earnings candidates here. So Dell is one. Dell's ripping right now. You got Mara potentially, XYZ, maybe, and then RKT. Did that actually end up doing it or no? Nope, RKT doesn't qualify. Let's hear. Ooh, we got a lot of slackers on the like button today. Uh-oh. Slacking. Yeah, gold looks good. Oops. Here comes GLD. All right. Okay. Yeah, Dell could be a fun one. Where's Mara? I mean, Mara, that could be an interesting one there, too. It's just a $9 stock. I don't really want to be screwing around with that. You know? XYZ, yeah, but you've also got the 200 EMA right there. So the only one that I'd really like here is Dell. This just looks like it wants to rage. Market working its way up a little bit here. Silver, 256%. Nice work, Miguel. Yeah, silver and gold, guys, have been something that I've been highlighting a lot for LTMP over the last couple of days here, or really the last week or so. All right, let's see. Where would we want the Dells? We've hit this a few times. So let's see. We're about to be there too. I don't really want to be doing this right into the daily 200. That's not really what I want to be doing. And other than that, there's not really much else from post earnings. All right, we're about to be 5 minutes in here. Let's see who we got. All right. Let's see what happens with Dell here. Dell could do it. I mean, Mara's there too. I don't really trust that. Just saying. If it's there for you, if you want it, it's there. And sometimes those are the best ones. And again, guys, it's post-earnings. Size for zero, very small amounts of money can turn into very large amounts of money extremely quickly. XYZ, you'd have to go right into the 200 there, so that's going to be a little difficult. There's XYZ, though. No, just kidding. I don't think that did it, actually. Hold on. Did it? Oh, I guess it did. Kinda. I like this Dell idea. I mean, it's already up a lot, but that could still be interesting. Market's still leaking here. All right, here comes Dell. I don't really trust it, you know? You need some level of continuation there out of the market. Oh, there goes Mara a little. There's GC. This thing just looks like a sleeping giant here again, guys, on gold. So we'll see if we can get that clear, confirmed break. Zero making a post-earnings move? Yeah, I mean, I don't really see any. Dell might. I mean, technically, Merit did. XYZ, sorta. RKT doesn't count. But that could be fun, though, over the next few weeks. Where's oil? Yeah. Oxy. Ooh, hello there. A lot of drama with gold this week. But again, though, what were we saying? If we can close near these weekly highs, I think we're still looking really good. Where's Bitcoin? Murdered? Murdered? Nah, not murder, but it's not looking good. EM's down a little here. Where's the dollar today? Yeah, dollar down. But, I mean, it looks like it could actually get a break to the upside here on the dollar. But if you roll over here, I mean, gold's just going to go full. Let's see. Yeah, Dell hasn't done it, and that's really the only one I really like. Oh, where's Palladium today? Yeah, that still looks like it wants to get going there, too. And then where are utilities? Oh, yeah, there go utilities up again, guys. XLRE probably break. Yeah, guys, I just, like, how many times do we got to talk about these things? And the way that money is flowing in the market, for you guys to understand, like, these are not high-quality conditions. These are not things that you see in bull markets. XL utilities breaking to the upside, raging, going parabolic. Yeah. gold looking like it wants to go vertical here. You've got the dollar screwing around. You've got oil moving to the upside here like this. Big candles on oil. You've got the 10-year, again, moving aggressively to the downside here as people are flying into the bond market. It's like, what are we looking at here to be bullish? People are just like, oh no, AI. And it's like, where have you been over the last 2 years? It's like, that's already played out. The AI trade and the concentration and everybody flying into these names has already occurred. The market's looking for what's next. And right now, they're looking at, oh no, what are the different risks associated with all of the decisions that the market has made over the last 2 years? Bmnr, it's the same thing that we've been talking about, guys. Like, I can't make it any more clear. It's like all of these little pumpers out there are going to be like, no, to the moon. And it's like, or, how about this? How about this? Or you can just listen to everything that I've said about Ethereum and Bmnr and just look at it as a proxy to take advantage of the movements in the crypto market, which, again, after we were not able to break and close above the 200 EMA here on Ethereum, which was that dynamic level that you needed to break and close above, it was over. Same thing with Bitcoin here. When you look at Bitcoin and you say, Bitcoin, again, we needed to get above this prior all-time high zone here, preferably with a retest of this zone showing that the buyers wanted to take this thing higher. We didn't. As soon as that failed, you're done. The other thing with Bmnr too is I used to sit here on the streams, guys, back in when was this? Kind of middle of last year? Yeah, or kind of end of last year there in 2025. And I was screaming from the rooftops that it made literally 0 cents to be buying something like Bmnr in the 50s and 60s. And you had so many people on the live chat being like, nope, you're wrong, this, that, the other. And I'm like, guys, these, like, what then happens? The one thing that I kept saying is, I think people are misunderstanding or just don't realize the level of volatility that comes in the crypto space. All they're doing is they're spoiled for, like, what happens is they're spoiled from all of the gains that they've seen within the crypto space and within a lot of the other areas of the market, and they go, no, it's just, everything's fine. What are you talking about? And I'm like, you got to think about what happens to some of these names in some of these, like, medium worst case scenario, like, not great scenarios here. And this is what I was outlining. I was like, if Ethereum drops here, like it easily could, Bmnr is cooked. I think if Jimmy's in here, Jimmy and I used to have like a little healthy debate in the live streams here where I was like, there's nobody that can convince me that this thing's going to go up from here. It just didn't make any sense. So there's going to be a time where this is going to make a lot of sense for like a short to medium term position trade. But it's not something that I'm going to own. It's going to be something that I trade and hold to take advantage of the movements in the crypto space without fees. Like all the crazy fees. That's what it is. I think that whole Mr. Beast thing is really stupid. There's nobody, like, the argument that people are making is like, oh, it's brand awareness and things like that. Well, you literally had Tom Lee coming out and saying that that's not what it was. They're like, no, we're not doing this to just try and get this in front of everybody else. And it's like, okay, so what are you doing here? Because the problem is that they say that the investment in the Beast Industries could 10x. Well, all the price targets that they have for Bmnr are like 100x. So if you're going to look at something and talk about like something going up 100x and then placing your money into something that you think could only go up 10x, that doesn't make any logical sense. Because if you really had confidence in something going up 100x, you would just buy the thing that's going to go up 100x, not the thing that could go up 10x, you know? Or how about this? If you really want if you want brand awareness, just give Tom Lee $5 million and just have him make YouTube videos every single day. He'd probably do it for $5 million, not 200, you know? Ooh, Hershey's moving over here. What's up with Hershey's? Oh, look at that thing go. Oh my God. We've had a lot of success with this name in the past. It wasn't really a setup here, but that is a very bullish looking chart. Gold starting to push back to the upside here. I'd love to see it break these highs here, and the weekly high at like 41.56. That would be great. What's the market doing? Nothing. Dell, nothing. Mara, nothing. XYZ, nothing. Again, this is like, it's stay away territory today. The only thing that I'm really interested in is the precious metals. You can kind of make the argument for bonds too, like TLT is breaking out here today. The problem that I have with this is the actual thesis and argument that comes along with these bond trades right now. Because like, why are bonds up when inflation data was horrible today, moving aggressively to the upside? Like, that's going to hurt arguments for rate cuts. Is this a flight to safety trade? Well, it might be, but like, why are people flying into the bond market right now? You know? Yeah, they're getting yield, but like, they're also getting yield in utilities. They're getting yield in REITs. Look at XLRE over here. The REITs are a little bit more risky, just because you could have some commercial office space in there. But again, this is what we want to see. Now we're back to the lower end of this zone here. We're going into the weekend. We could easily see some escalation nonsense in the Middle East to break us down below this area here. Again, first stop in the market is really the 6750 area, about 100 points lower, but we really want to get at least all the way to like this 6500 area. That's where we really want to get to. Also, as you guys are filtering in here, make sure you guys are hitting that like button. Costs you nothing to do. It helps me out a whole lot. A lot of slackers on the like button today. We've got a 200 like goal on the stream. We're 10% of the way there. Dell popping? I mean, not really. I mean, kind of. It just kind of went off the 10 here. I mean, it still could work. The problem is that like this, yes, can get a mind of its own. We've seen Dell do that many times in the past, but like in this environment, it's like, well, okay, then what happens if the market just goes nuke? You know? It's like, well, I'd rather be looking at like gold and silver. I mean, you can do it. It's a post-earnings, size for 0. Liked? Thanks, guys. Appreciate it. Sofi? In what sense? I mean, their business model is going to continue to have success, but like nothing has changed since like the last like week. The one thing that people need to realize here is that, oh yeah, there goes Sofi to the downside. I mean, remember the downside entry I gave you guys here, the 1906 all the way down to like this 1750 area. That was nice. This just, okay, so let's just, you're looking at the weekly 200. Yes, I think that's a good spot to look at for Sofi there. Weekly 200 is sitting at what, 1539? Yeah, I think that's a good spot. The thing that you got to think about with names like Sofi is one, I mean, I first started covering this one for you guys and outlining it. My position's at $6.60. Then I also gave a secondary entry right here on the weekly at what, $13.60? But what you also have to think about too is that these names, Sofi, Robinhood, Webull, a lot of these other names are going to be almost a direct kind of measurement here of overall investor risk appetite. Why spot moving? What's that alert? Oh, that's interesting. But that's what they are. They're effectively measuring risk appetite in the market, but also that's what crypto is too. So you could make the argument and say, all right, well, it's moving with crypto. So it's both, basically. Until we end up seeing this like washout in the market, I wouldn't expect these to have a great level of success. Fundamentally, again, they can continue doing relatively well, but you also have to think about what this risk-off behavior actually means for like retail market participants. It's less volume, less action from retail, more fear. But you can see it in the live chat and on social media every single day. It's just like people are afraid of what's to come. And it's like, I think we should be excited for what's to come because there's going to be a lot of opportunities out there if we can finally get this push down in the market here and stop chopping around. I'll tell you this, it's in everybody's best interest in the market here to see this thing drop to at least 6,500. Ideally down to like this 6,100. It is in every single person's best interest here for the next few years to be able to get better entries, to be able to see a lot of these better setups starting to form with some follow through. Because when you see a lot of this uncertainty in the market here, let's just say, for example, that the market were to just move up into the highs here and the news and everything else is remaining the same. Like this, kind of what we saw here. Every time that we see moves like this, you guys will hear me say on these live streams here, I'm like, yeah, but it doesn't change anything. Like we can move all the way back up to here. And if there's nothing actually changing in the news cycle here or fundamentally about the system, it doesn't matter because you're still just trapped in the same range. And if we end up moving up to these highs here, taking the time to do that, and then you get a little very tiny piece of maybe not so good news, well, you're right back down in because everybody is still scared. The fear doesn't go away. the fear will go away eventually once the fears are basically validated. Like right now, people are afraid of that movement to the downside there. So you're going to see a lot of this choppy action. But once we make that move to the downside, you're still going to see people be very fearful and say, oh, it's going to keep going, this, that, the other. But it's like, but that's when the opportunities actually start to show up. It's not here. Like people are looking at like, oh, what about this stock? Should I go out and buy it? And it's like, well, maybe it might be a decent entry over the medium to long term there, just in terms of its valuation. But you also have to think about, okay, what actually happens if this floor is broken here, and what happens to those individual names? It probably moves down a lot more. Any name that people are looking at right now, you know? So in those names like Bitcoin and Sofi and Robinhood are going to be like a really good like metric to say like, all right, this is where risk appetite is in the market. Kind of software too. Like everybody's really worried about like these software companies getting clipped and just like whatchamacallit, headcounts going down and things like that. The other interesting thing about yesterday, guys, with Square or Block, whatever you want to call it, XYZ, is that every single software CEO just saw Jack Dorsey cut 40% of his headcount, and look at the stock. I mean, it's selling off a little bit today, but this stock is up, what, 14% here today? Runs that, again, think about what we were saying this morning about post-earnings. It's like, I don't want to really be buying this thing up to the 200 here. It's probably going to reject. So every next earnings season could be very interesting in software as you see like these big layoffs. Now, the interesting thing about this is if you look at the actual like strategy that Jack Dorsey used, it was one and done layoffs. It was boom, we're going to cut a large percentage of our headcount here so that we don't have to continuously come out with updates and say we laid off this amount, this amount, this amount. And the reason for that is that if you're a leader or like a corporate executive and you continuously, like every month or every 2 months or every quarter, are engaging in these slower layoffs, it really drains morale at the organization because everybody's going to have this fear hanging over their head that they're next on the chopping block. If you do it all at once, though, kind of like what Elon did at Twitter, you get that out of everybody's system. They have more confidence in their current position at the company, and they can kind of move forward from there with a higher level of confidence and security. But if all of the software companies start doing that, it's like, oh boy, you're going to see a lot of people without jobs very fast. So, okay, but this is actually the interesting thing. Jack Dorsey was actually citing, like, yes, we are seeing productivity boosts due to a lot of these new tools, these AI tools that they've implemented. But a lot of it did sound like that Harvard study too, where these layoffs were happening, not necessarily as a direct result of new, like, these AI products, but the potential of them. So we'll see what ends up happening over the next, I don't know, couple of quarters here with this. But I would assume a lot of you guys have read those reports from over the weekend about these different scenarios with what could happen with AI. And we'll see. So, but again, guys, gold is still looking pretty freaking good over here. You've got GC still looking like it wants to rage to the upside. I mean, let's just take a look at silver here. How's this look? Amazing, actually. Looks great. Breaking out to new highs there. I like that. Market not looking good, which is what we've effectively expected here. TLT still moving to the upside. Well, that's an interesting weekly chart. If they move bonds up too much, I just like, you're going to see these like, I mean, I want to take a look at this right here. What's the Fed watch tool saying? Because you're seeing some weird movements. It's really just flight to safety right now, but you're seeing some weird movement. All right, I want to look at end of the year and see how things have moved because that's really all I care about. I don't really care about the next meeting. All right, a week ago we had, what are we at, 350? Yeah, so a week ago we had a 33% probability of 50 basis points this year. Now we're at 32. A week ago we had 26% probability of 3 rate cuts. Now we're at 27.8. For 4 rate cuts of 25 basis points, a week ago we were at 10.9%. Now we're at 13. Yeah, so it is moving up on the more rate cuts side, which is interesting given the fact that we've had 2 hot inflation prints. Now, one of the reasons for that could be that we might be forecasting unemployment to go up and growth to potentially slow down. And we know, according to the last Jackson Hole Symposium, that the Fed is okay with letting inflation run a little bit above target as long as growth is not sacrificed. So that's labor market and GDP. So that could be why there. Market doing a whole lot of nothing today. And again, for those of you guys that still want to join us in LTMP, again, check that link pinned to the top of the live chat. I can throw it in there for you guys too. Get 2 weeks free. That's not going to last for very long. But for those of you guys that want to jump in there with us, see if you like it, see if it's for you, and see why everybody loves the group so much, here's the link. Hop in there with us. B-Caesar 622% on the post earnings move. Nice. Yeah, I'm looking at the GC chart a little bit more, the gold futures chart, just because it's a little cleaner. It doesn't have that crazy wick. You're not seeing all these gaps. I mean, it's kind of like, again, why I look at ES and not SPY, just because it's a little bit cleaner in terms of the action. Ooh. XLF getting hit there. Yeah, what else is on the news feed here that we've missed? Since I've been just yapping. All right. Yeah, I mean, the Chicago PMI numbers look good. I see that. So growth isn't really getting sacrificed right now. So why are we projecting more cuts? I don't know. It's weird. Very strange here. I'd love to see gold start raging at some point. The other thing that I want, I mean, it's up, what, 0.5% on the day? Looks good. What are the updates here with the Iran situation? I heard something today where it was like, is there something about like Israel evacuating people because they think Iran is going to strike them? That, to me, makes not a whole lot of sense. Let me look. Let's see. 10:24 this morning. Yeah, United States ambassador. This is what it is. United States ambassador to Israel emailed his own staff and told them to leave the country today. That was Mike Huckabee. To every embassy employee in Jerusalem, telling them that anyone wishing to depart should book any available flight and leave Israeli soil before the day ends. The embassy has shifted to authorized departure status, meaning the U.S. government will pay for non-essential personnel and their families to evacuate. New York Times obtained the email. Timestamp is 10:24 a.m. local time. The language says no need to panic. The action says panic. India told its citizens to leave Iran. Yeah, I mean, it looks like something's brewing over there. Yeah. Mining a bunch of Bitcoin on subsidized energy, so their energy cost is like, wow, that's crazy. Didn't Rubio and Vance say they thought Iran had nuclear material? Don't they say that every time? It has to do with the enrichment levels, but it's real. It's like, we're not going to get into that. But we can look at the situation from, like, let's say markets perspective and say, all right, something's probably going to happen. That's why oil's ripping this morning. Again, so that email and the movement in oil would make a lot of sense. See? Or it did. I mean, oil was up over 3%. So we'll see what happens. I mean, it's going to be interesting. It's almost like the same thing that happened, last year, where it was like, don't enrich uranium this much. And they were like, well, we're gonna because of X, Y, Z. And they're like, well, don't. And they're like, okay, let's go do some military action. And then nothing happens. Yeah, banks don't look good. Where's KRE? The private, KRE moving down here too. The private credit stuff is interesting. Where's Lincoln? Yeah, that's not good, guys. These insurance companies are getting whacked. What about Apollo, KKR? Yeah, these moves in like private credit. The insurance move is a private credit move. Lincoln, what a lot of people are thinking, and this is the interesting thing. I was talking to a lot of people that like are dealing with insurance companies on a lot. Actually, one of the interesting things about this entire situation, guys, that people are talking about with private credit is car washes. One of my buddies used to work at a private equity firm that literally spent his division or whatever it was literally car washes. And then what happened? This was like 3 years ago. It went bink, done, no more. So, I mean, he never really had to work there just because, like, he has all of his own real estate. But, like, I was like, dude. And then we started talking about car washes, too. And I was like, okay, logically here, if your firm is not doing well in the car wash space, why would we? I was like, why would I then go put capital into car washes? If they can't do it. They have the relationships. They have the team in place. Why would we do it? You know? Maybe at a smaller scale, just take the cash flow. But then sell it to somebody else like them. That was kind of the idea, but we didn't end up doing that. It just didn't make sense. But it's that, and it's like the one thing that I was trying to figure out over the last couple of days here is like, okay, if a lot of these insurance companies are invested into these private credit instruments, like Breaking Bad money laundering? No, not like Breaking Bad money laundering, you know? But the interesting thing about, I hope everybody, like, all right, does everybody, let's actually do this first. Does everybody have a general idea right now of why, because I can go over it, but why people are worried about what's going on in private credit? In the insurance company relationship to all of this? Because if you guys do, I can just kind of talk about the next thing that I wanted to talk about. But if not, I can go over some of the other stuff too to give you guys a background. Let's see. Have you guys read some stuff on this? Have you seen this getting circulated around? 2008? I mean, it's sort of like that. Part 2? Kind of. This is all linked to AMC. There's a lot of different elements of this, but effectively, I can just cover it quickly. Effectively, what private credit is like lending to private businesses. So like maybe it's a what do you call it? A car wash. Maybe it's a property management company. Maybe it's software. Maybe it's like a lot of the big retail stores in Kansas City are going out of business. Yeah. So here's kind of the issue. It's a private equity and a private credit issue where one of the things that people are thinking about is like if these businesses are struggling, let's say, and they can't pay off the loans, risky credit, yeah, the spreads of like they have started to engage in a little bit more risky lending. And if these businesses can't necessarily pay, this is where the issue kind of arises from, or this is where people are thinking. This is kind of where it gets to. So if they can't pay the interest rates on the loans, they're gonna switch basically to like, let's see, what's called payment in kind, which is effectively just rolling forward the loan balance. So like if I owe you, let's say like $1,000 a month and I can't pay that, you'll just go, oh yeah, that's fine. Just like roll it into the loan balance. And it just goes up and up and up and up and it compounds. So not only do you have the interest rate compounding, but you also have the loan balance compounding, which is bad, but they're going to mark that as like income. So what a lot of these, but the other thing about these businesses here too, is that a lot of them aren't worth like effectively what a lot of people are saying they are. Because it's private. Like you do another round of lending, we'll lend to you at this. But like, especially the software names, we've seen a giant software write down in like in a sell-off in the public markets, but you haven't necessarily seen that happen in the private markets yet, because in some of these cases here, they don't have to. If these loans or some of these investments here are marked as held to maturity on these balance sheets, they don't have to do anything with it in the meantime, but they're not actually worth what they say they are. So if they have significant issues here, you get these massive moves down when things start to happen or these liquidations start to occur. Now, the problem is in the question that people are asking themselves is, and this is where it all comes into, is, I could probably explain this a little bit better. I just don't want to try and go too deep into the complex stuff of it because I don't want to confuse everybody. What you really need to understand about this situation is that you have effectively, let's use the 2008 example. You have AAA rated stuff that may not actually be AAA, if that makes sense. You have first lien, senior secured stuff that actually might be a lot more risky than people are saying they are. Okay? Now the problem is that, and this is why a lot of these insurance companies are moving. Dell's moving. Let's actually take a look. So the reason why a lot of these insurance companies are moving is because Apollo owns Athene, KKR owns, I think it's Global Atlantic. What's it called? Blue Owl owns Kuvar, whatever it is. And these insurance companies, in order, especially on like the annuity side and sometimes the life insurance side too, need to go somewhere in order to generate a significant level of yield on this. So they're going into, and the reason why, again, if you look at a lot of these private equity deals, also, I've seen them. Like I literally was seeing all this Blue Owl stuff, and I just went back in one of these like decks I have, and I was like, oh yeah, well I know Blue Owl is mentioned in the alternative section, so like, what do they have? There was in one of these things, guys, and this is what was like kind of freaking me out a little bit. There was the biggest holding in this like alternative like income portfolio was a property management company that was paying an interest rate of SOFR plus 6.5, which is a little bit on the high end too. It's usually like SOFR plus 4 to 6 is usually kind of the norm there. So SOFR is, what is it? Secured overnight financing rate. It's a replacement of LIBOR, which again is going to move down when the federal funds rate moves down. So these loans are variable. Which again, remember what happened last time? Variable interest rates. But they also had this like asterisk where it was like 14.25% payment in kind, which is then the rolling into the loan balance. And I'm like, why is a property management company paying a 14.25% payment in kind? Now, I'm not an expert in that, but that doesn't seem really great if you're having like a property management company now having to like basically roll in this loan at a rate of like 14.25% every year. That doesn't seem good. So But these insurance companies need the yield because, again, they're going to be rated really well. The ratings agencies are like, these are rated really well. Okay, so the issue then comes is, okay, because this is the main question that I've been trying to figure out, is it might be, so this is kind of where how I look at things. You go, all right, it might be a problem. It could be. You got some of these things in here. It probably is going to take a long time for these situations to play out because, remember, they don't really have to change a lot of these. As long as the businesses are still operating and they can just do this payment in kind nonsense, it's like, they can kick this can down the road for a while. So it might be a problem, but it might not. The thing is, well, how much of these general accounts at these insurers is actually invested into these things? That's the question. That's the question that everybody needs to be asking. Because you can see contagion in the private equity space, in the private credit space. Like, yeah, it might happen. But the real question is, what happens to these insurers? If they're only invested, like, let's say 3% to like 10% of their general accounts into these instruments here, it's like, all right, it's not great, but it's not catastrophic. But there was a report from, I believe it was Moody's, that said that overall, like, life insurers in the United States had 33% of their general accounts invested into private credit. Now, here's the other problem, and we haven't talked about this at all, but I think this is interesting. I actually had somebody just go and look at the general account. I think it was Athene. We we looked at a lot of them, but like we were looking at this, and they were like, oh yeah, I can just go look and see what's in their general accounts. There's like some, here's Dell if you want it. Dell looks like it's going. Gold is actually moving here nicely. So hopefully you guys are enjoying this today. Make sure you guys are hitting that like button on the stream. So the interesting thing about this is that they will list the way that it's marked on like in these like reports is like you might see it labeled as like private credit in some of these alternatives, but a lot of it is like they'll have giant holdings in like, let's say, fixed income. But then when you look a little bit further, you can actually find that some of those investments can then get included into that fixed income number. That's like always a giant percentage of what they're holding in their general accounts. But there's not really any way to go in and see the breakdown of what the fixed income is, if that makes sense. So let's say you have a pie. You have, let's say, 65% fixed income instruments. Now, technically, it's not fixed. Well, it's fixed plus, basically. You get SOFR plus or payment in kind. But you don't know what's in, like, you have that section of the pie, but that section of the pie could be corporate bonds, it could be munis, it could be private credit. The other weird thing about this is that when a lot of these, like, if these private equity firms or private credit firms, like Apollo owns Athene, it's like they can double dip on the fee. You get the management fee, and then you also get there's gold. Hello. Hello, gold. How we doing? MBS 2. That is labeled differently, I think. I'm pretty sure when we were looking at these that MBS got its own slice. I'd have to look again though. But then so like Lincoln's getting murdered. Look at this. Lincoln National, multi-line insurance here. What about the other ones? Let's just look at them, you know? Which one? MetLife, maybe. I don't think so, but maybe. Yeah, MetLife, murder. Let's just look at some of these insurers. AIG. Not really affected. Let's look at this one, SLF. No. See, like, some of them are going to get affected, but some of them are going to be fine. Global Life. What's GL? No, that one's fine. Lincoln's getting hit. Let's see. I'm just looking at some of these. F&G. Yeah, look at this. F&G, annuities and life. Murder. Murder. Look at this thing. It's down freaking 50%. So it like might be an issue because so then like because this is what a lot of these like those reports, when you think about like, ooh, software, AI, things like that, and things get replaced and stuff, it's like, well, if a lot of these like software names, because that's what the main focus is with a lot of these like private credit things, it's like, well, if the software companies are now worth way less than what they were before, it's like, well, these insurers have invested in these instruments that are then invested into these things that aren't actually worth what they say they are. They're listed as like being like first lien, senior secured, things like that, but they're not actually as highly rated as they probably like are listed as. And that's why you're seeing this right here, nuking in insurance. So I might do a whole video on this. We'll see. Gold looks great. So there's GC still hasn't gotten there yet, but it's really close. Where's Dell? Because Dell was close. Nope, didn't quite get there. What's the market doing? It's holding on a little there. I mean, I'd be fine with it. Yeah, I took the rest of my circle profits today too. You guys can hold them if you want. They're really free, but so we're going long owl? No, you would not go long owl. But yeah, that's one. Nuke. Apollo, nuke. KKR, nuke. What about Blackstone? There's another one. Nuke. Blackstone engages in the provision of investment and fund management services. It operates through the following segments: real estate, private equity, credit, and insurance. We've had some fun on these names in the past, though. Here comes Dell. I just want to see if we can get anything good on this. They're okay. It's not the best, though. That's actually better. Yeah, hopefully you guys are enjoying this. Make sure you guys are hitting that like button on the way in. Costs you nothing to do it. Gold back down. This still looks like it wants to rage. Look at this. Bing. Come on. oil doing? Nothing. Yeah, I like that we're back near these weekly highs on gold. RKT did a whole lot of nothing there off that earnings. It was interesting with rates doing what they're doing, and then XLRE is not really getting a break today, which is yeah, it is. What about the other REITs? Oh, there goes Realty Income. Oh yeah, I think these REITs are gonna have some fun here. I mean, it's paying what, 4.9? If rates go down like this, you're just gonna see people still fly into the high dividend payers like this. Like they're pushing rates down, and what do you got in treasuries? PLD breaking out. I like these. We've been talking about these for like 2.5 weeks here, guys, that the REITs moving like this is not great for the market. You've got probably XLU moving up too. Yeah, look at this. Neo struggling at 5. Well, yeah, I mean, that's market doing this is not going to be good for anything. It's going to be great for things like utilities, REITs, precious metals, oil, bonds, maybe some value. Like we could look at like where's Verizon and AT&T? Like where's T? Nah, they lost the bid. Walmart. Yeah, it's hooking. Coca-Cola. Yeah, Coca-Cola's still going there. But that's who's buying Coca-Cola up here, guys? That's the other issue with this. It's like you're going to see these value rotations up to a certain point because they're not value anymore. You know? Where's PM? Philip Morris, still near the highs. What's it paying right now? 3? Not bad. I mean, I gave this to you guys what? It's at 188. You guys had it at 95. First time to trim was right here. Off of the, not the thesis break, but the playing out of the thesis with the Zin shipments. You can hold the rest of your position. Now you're back at the highs. Is Dell going to pop here? What? I don't know. Maybe it does, maybe it doesn't. It hasn't even triggered the entry yet. If it breaks that top side of the 5-minute opening range, sure. You could take a little something on that. But again, it's post-earnings. You size them for 0 and you see what happens. Like, that's where you get the big 1,000%ers from. FSM, what's that? That looks good. Where's NEM? Oh, there it is. Newmont. Where's TMC, the metals company? Ooh, that's interesting. Not having a good day today. Wouldn't have expected that. What about REMX? Rare earths. I'm looking at uranium now. Nah, not really anything going on there. Interesting. People are saying that this is not true, that the U.S. State Department authorizes departure of non-essential diplomatic personnel and family members from Iraq and Kuwait. So the Israel one still looks like it's true. Last time the U.S. evacuated non-emergency staff from Israel, strikes on Iran began 8 days later. Beijing on the same day told all Chinese citizens to evacuate Iran. Let's see. 14 tanker planes landed at Ben Gurion overnight. Interesting. Craft looks good. It's the ticker. KHC. That looks fun. Market slowly working its way back up. Yeah, nothing on Dell yet. You might get this, especially if the market wants to try to pull up here. I mean, let's look at this on a smaller time frame, see what it looks like. Yeah, it's trying. UPS and FedEx. Let's take a look. I mean, you guys know I'm not really interested in much here. It's okay. FedEx is better, but that's extended. Oh my God, look at this thing. Remember the last break on this thing at 255? Stock's at 388 right now. Yeah, nothing really on post earnings tonight. Did have that 1000% this week though. That was fun. Really like the look of this. Really do. Look at this thing. AOI. Yeah, that was a good one. Well, I asked 70, almost 75 to 77, 78. That's not bad. But that one's up a lot. Oh, there's Dell. There's Dell if you want it. Let's see. That's an interesting one. We'll see if it wants to get going there. I don't really have a lot of faith with the way the market looks, but who knows? I mean, gold's starting to cruise back up again. Getting some volume. It's moving all over the place right now. Let's see. it's raging a little. Let's see what it wants to do. Yeah, these zones are still good. Look at these. Still printing. GLD trying to get back to 481. That's nice. UBS strategies downgrade U.S. equities to benchmark. Nothing too crazy there. Yeah, Dell's raging a little. Let's see what it wants to do. See if we can break 145. Looks good. There it is, 145. All right, Dell. Let's see what you got. Let's see what you got. 60% on Dell? I'm trading dailies there, buddy. I think. Hey, you're welcome. Nice. Yeah, guys, again, remember, I'm going to throw that link in the live chat again. Again, you guys want 2 weeks free to LTMP, I'll throw that link in there for you guys. Again, once you guys hop in, just make sure that you have your Discord account connected to your WAP account. You'll be good to go to jump in there. Links in the live chat there for you guys. 80% on Dell. Nice. Again, you guys know the deal with post earnings. It's make them free, see what happens, but they can go anywhere. They can go up, down, left, right. That's why we size them for 0. I'd love to see gold rage today. I don't know if it's gonna. I mean, it's already a decent move today over here. 100% on AAOI. Nice. Yeah, see Dell right back down. These things, again, guys, the post earnings are going to move all over the place. It's got a good start. See what happens to it. It either goes absolutely nuts or 0. That's how the post earnings work. But all right, folks, it is 10:35. I've got a boatload of things I gotta do today, so that is gonna wrap it up for today. Oh, I didn't even put the link in the live chat for you guys. It just wasn't the link. Sorry. Hold on. I'll throw the actual link. That was missing a letter. All right, there you guys go. That's the link for you in the live chat there. So again, make sure you guys take advantage of that offer to hop in there with us to LTMP. I might be able to get a video out for you guys on Sunday. I definitely can't do one tomorrow and not today. But yeah, I mean, we've got a very interesting market ahead of us over the next couple of weeks here. So again, gold's looking really interesting. We're going to keep focusing on the post earnings, nailing those. I mean, you guys have seen how crazy those are. They're wild though. That's why, like, you got to make sure that you're listening to exactly how they're meant to be traded. Size for zero. So folks, I hope you guys have a great rest of your day. It was a very interesting week in the market this week. I will see you in LTMP. The watch list will be out for you guys on Sunday this week. I think the last 2 weeks I did it for you guys on Saturday. But yeah, this week will be Sunday. Yeah, it's gonna be interesting. Got a lot of nonsense going on in the market here. So folks, have a great rest of your day. I'll see you guys in LTMP.